Hello, everyone. I'm Matt Clark, research analyst for Money and Markets with your Money and Markets week ahead, what to watch on Wall Street. Now, last week on Wall Street was fairly tame, especially if you consider short sell week the week before. So not a whole lot of big activity going on last week. Earnings season is starting to wind down, and there is another big initial public offering on the books coming up this week. So here's what to look for on the week ahead on Wall Street. Now, again, like I mentioned, there are a few initial public offerings or IPOs on the docket for this week to be priced. But one of them is actually particularly big, and I'm kind of surprised I'm even talking about this. But Bumble Incorporated, which expects to price its IPO on Wednesday or Thursday, could be the biggest launch to watch. Now, Bumble, if you're not familiar with that, is a popular dating app that has said it is, quote, changing the dynamics of dating, end quote. In the app, basically, women make the first move. Now, I'm not really all that familiar with dating apps. I've never used one, so I don't know exactly what that means. But from what I could see, users fill out a profile and they list your profile. And then if a woman is interested in either dating or connecting in some way, either as friends or as dating, then they make the first move to let the other person know about that. It's not the other way around, or typical with other typical dating apps where it could be either way. A man or a woman could initiate the communication. Now, the app is open to those who are looking to date, also find friendships, or even business connections, which is kind of interesting. The company's CEO is Whitney Wolfe Herd. If that name sounds familiar, it's because she founded the group in 2014 after she left dating app rival Tinder. Now, according to the company's S-1 filings with the Securities and Exchange Commission, it had 2.4 million users for the 9 months ending September 30th of 2020, and those users generated about 36.1 billion messages on the app. That's a lot of messaging. Bumble reported an earnings loss of $116.7 million on $376.6 million in revenue for the 9 months ending on September 30th of 2020. And that's compared to an earnings gain of $68.6 million for the same period the year before. Now, the offering, Bumble will trade on the Nasdaq Global Select Market. It will trade on the Nasdaq under the ticker BMBL. Renaissance Capital IPO ETF, which is one I like to use to track how IPOs perform, it's actually up 117% over the last 12 months compared to an increase of just 21% for the S&P 500. Now, the exchange-traded fund with Renaissance Capital actually tracks the performance of IPOs across the market. Bumble is planning to sell about 34.5 million shares in the IPO with a price range of between $28 and $30 per share. They're looking to raise as much as just a smidge over $1 billion from that IPO. Now, at the top end of the price range, Bumble could command a market value of $6.46 billion, including debt, after the listing. The company said it will use the proceeds from the IPO to purchase common shares of Buzz Holdings LP, which is actually the parent company of Bumble. That will make Bumble the sole general partner in Buzz Holdings, basically taking Bumble and making it the sole owner of Buzz. And then Buzz will then use those proceeds to pay down more than $300 million in debt. The remaining proceeds will be used to buy equivalent common shares from its pre-IPO owners. According to The Street, Wolfe Herd will own approximately 14% of the company. Following the IPO, another 83% will be owned by Blackstone Group. The lead underwriters for Bumble's IPO are Goldman Sachs, Citigroup, Morgan Stanley, and JP Morgan Chase. The quarterly earnings season, as I mentioned earlier at the top, has already started to wind down as several large companies have already reported their earnings for the last quarter. But in our deeper dive of earnings this week, I want to focus on the cola wars. For decades, there's been a long-standing battle between Coca-Cola Incorporated and PepsiCo Incorporated to control market share in the beverage industry. And this has gone well beyond just Coke and Pepsi, as now both franchises have branched out and include energy drinks and various other soft drinks and water and all sorts of things now. All sorts of beverages are under the umbrella of both these companies. Now, in the last time out, in their last quarterly earnings reports, both Coke and Pepsi did beat revenue and earnings projections. Coca-Cola reported earnings of 55 cents per share on revenue of $8.7 billion for the quarter. That bested Wall Street projections were for 46 cents a share of earnings on $8.36 billion in revenue. The quarter also marked the first revenue increase for Coca-Cola in three quarters, and they had their first revenue increase. Earnings per share have been kind of up and down all year, ranging from 55 cents to 42 cents per share. PepsiCo, like Coke, also beat Wall Street projections by reporting $1.66 of earnings per share on $18.09 billion in revenue the last quarter. It was the third consecutive quarter where the company not only beat expectations, but bested the previous quarter. Wall Street analysts are expecting an increase in revenue for both companies from the fourth quarter. The forecast for Coca-Cola is for earnings per share of 41 cents on revenue of $8.61 billion. PepsiCo is forecast to have earnings of $1.46 per share on $21.75 billion. I think this is going to be right about in line. I don't see a lot of deviation, maybe a little bit of an upswing in earnings per share, but probably not a whole lot. Revenue is going to be fairly steady and probably fall pretty close to in line with Wall Street expectations. In this week's data dump, it all starts on Wednesday when the U.S. Bureau of Labor Statistics will report its year-over-year changes to the Core Consumer Price Index, or the CPI. The CPI measures the changes in the price of goods and services, but it takes out both food and energy. It's a key component to look at purchasing trends as well as kind of a snapshot into potential inflation. The index has remained unchanged, marking a 1.6% increase over the last 3 months. That's down slightly from the 1.7% reported for August and September. Expectations are for the index to pretty much stay with a level reading of 1.6% of increase for this month. On Thursday, the Department of Labor will release its initial jobless claims for the week. Now, I haven't touched on this for a while now just because it's pretty widely reported, but the figure does reflect the number of Americans who filed for unemployment insurance for the first time. This isn't revolving claims. This is initial claims. So this is new people who are filing for unemployment for the first time. Last week, the department noted that 779,000 had filed for unemployment, but that was way better than the 830,000 that had been forecast. It was the lowest number of weekly initial jobless claims reported since the beginning of January, and does indicate a slight economic uptick, but not a whole lot. The forecast for this week is for around 847,000 new applications for unemployment. If the figure comes in lower than that, it would further signify that the U.S. economy could slowly start to be picking up from the coronavirus. Now, to finish off the money markets week ahead, here's a look at some of the key earnings reports that are due out this week. On Monday, very popular mall owner Simon Property Group will report its earnings, as well as toy maker Hasbro Incorporated. On Tuesday, Cisco Systems, Twitter, Canopy Growth, the largest market by market cap marijuana producer in the world, will report, as well as Lyft, popular rideshare program. On Wednesday, we'll have Coca-Cola, as we've talked about before, Uber, which is a competitor to Lyft, as well as General Motors and Zillow Group will report earnings. On Thursday, the Walt Disney Company. Be curious to see what their park revenues look like as shutdowns have continued in California and to a slight degree in Florida. PepsiCo, as we mentioned, Duke Energy Corporation, and AstraZeneca PLC will report on Thursday. And then on Friday, we'll see Dominion Energy Incorporated, as well as Newell Brands, amongst the many that will be reporting earnings on Friday. So it's going to be another kind of a slow week a little bit. We're just about a week away, a little more than a week away from the President's Day holiday. So the markets are getting a little bit prepared for that. They'll amp that up more this week and next week. So that's all for me this week. Until next time, this is Matt Clark, a research analyst for Money and Markets, and your host of the Bull and the Bear podcast and the Marijuana Market Update. Safe trading, everyone.